In this module, we shall study about listing securities in secondary market and screen-based trading. Listing of securities. Listing means admission of securities to dealings on a recognized stock exchange. The securities to be listed can be from public limited companies, can be securities of a central or state government, or they can be quasi-governmental or from some financial institution, corporations, etc. Dealings on a stock exchange basically refers to the rights related to buying and selling a security on the particular stock exchanges where the securities are listed. Now, small and medium enterprises can also apply for listing of their specified securities exclusively on the institutional trading platform. Listed securities also gain advantage in primary market as they can be sold at any time the buyer of security desires. The company who applies for listing is commonly called as issuer because it is the one who issues its shares to the public. If a company comes to a decision to list a security, it has to list the whole class of that particular security. For example, if there is a company which has made up its mind to list its securities, then all of those shares must be listed, thus allowing all these shares to be traded on the stock exchange. After studying this module, you shall be able to understand what is listing, what are the advantages and disadvantages of listing, what rules are to be followed for listing, concept and advantages of screen-based trading. Let us discuss the benefits of listing of securities. Benefits of listing is evident from the fact that listed shares can easily be bought and sold by investors even after they are issued in primary market by the company. This only benefit is lucrative enough to get securities listed as investors look listed securities as some asset which can be bought and sold easily on the need of funds. However, there are following benefits of listing also. Benefits of listing to company. Listing provides greater access to capital with prospects to raise funds both at the moment of listing and after listing. A company can raise money by selling out some its securities in primary market and then in secondary market via some of its own investors. Listing of securities raises the value of shares automatically as liquid assets are always preferred for investments by the public. Also, when there are large number of buyers for any commodity, its value will increase. Listing helps in increasing the shareholder base that will lead to increased trading, that is buy and sell of companies' shares or securities. Listing of shares not only increases the value of shares but it also increases the value of company. It has generally been noted that listed companies' value are usually more than those companies which are their unlisted equivalents. Many companies give share to their employees under some employee incentive schemes such as ESOP, etc. A company whose securities are listed on a stock exchange will find greater opportunities in offering such schemes. A listed company enjoys visibility in the market and thus able to ensure security to companies' customers and suppliers regarding their funds, as they can easily track companies' performance by looking at the company's performance in financial market. A listed company is subject to many rules and regulations by various authorities such as SEBI, government, and also guided by various rules. This helps in better corporate governance and transparency. This helps in understanding the efficiency of management of information and control as well. Promoters or major shareholders of the company can also sell a part of their holding without having to give significant discount. Listing not only brings a company's shares to the attention of hundreds and thousands of new investors, but also encourages institutional investors to be interested in them. Listing of securities helps the company to gain national importance and widespread recognition. Next, the benefits to shareholders. The shareholders or investors too derive manifold benefits if the shares held or be in possession by them are listed on the stock exchange. The following are the important benefits to shareholders of a listed company. Listing provides liquidity to the shares of the company. Thus, it makes easy for investors to buy and sell these securities in the secondary market as per their requirement or wish. Listing of securities helps the shareholders to obtain the best prices for the securities that they want to sell off. It helps shareholders to avoid botheration of canvassing from door to door to sell the securities. A mere telephonic or verbal order to a stockbroker or an online selling by just a click will help them to buy or sell a listed security. Now, with online trading, the current prices for buying and selling a securities are a knowledge of everyone. So, there is no tension for searching a good price to buy or sell. The stock exchange quotation helps the investors to keep themselves aware of the price changes of the securities owned or held by them. Nowadays, all this information can be easily availed on your cell phone by downloading required applications related to stock market. The investors in a listed company get maximum protection and security in regard to their holdings because listed companies are governed by various rules and regulations, and the stock exchange rules and regulations have been formulated with the end in view. Investment by a person in listed securities can prove to be very helpful in getting loans from banks because many banks accept the shares listed on a stock exchange as a security against loan and value them on the basis of their quoted price on the exchange. Listing is also advantageous in the matter of income tax, wealth tax, estate duty and other taxes payable by shareholders in their capacity as SSEs. At this point, one should make it clear that the stock exchange cannot and does not stand sponsor for the listed securities or guarantee their investment value, but it does ensure continuing protection and support in the organization and development of sound and progressively high standards of corporate practice and procedure. For these reasons, listing carries the hallmark of prestige and confers on the listed company its securities and its shareholders a privileged position. Moving on to the disadvantages of listing. There are certain disadvantages of listing securities on stock exchange. Listing of securities makes it possible for anyone to buy and sell companies' shares. Thus, due to listing, there will be continuous change in ownership of company. With listing of securities, companies are faced with more rules and regulations. It is more answerable and accountable for whatever it does. Disclosure. A public company has an obligation to inform the public through the authorities of what's going on, although this doesn't always work as well in practice as it does in theory. However, every time informing public can be quite unhealthy for companies' competitive strategy. Listing of companies requires various kinds of costs to be paid for listing. Thus, list is not cheap as well. Let us now understand the procedure for listing of securities. Listing essentially means getting the securities of a company listed in the stock market to raise investment and for further trading. There are broadly 3 legislative provisions which govern the listing process in India of the Companies Act 2013, Securities Contract Regulation Act 1956 and Securities Contract Regulation Rules 1957. The guidelines are also issued by the SEBI. However, following is the process of listing. Let us now study valid by articles of association. Rule 19(2)(a) of the Securities Contract Regulations 1957 requires that the articles of association of the issuer wanting to list its securities must contain provisions before listing of shares. First, that there shall be no forfeiture of unclaimed dividends before the claim becomes barred by law. Second, that a common form of transfer shall be used. Third, that fully paid shares shall be free from all lien, and that in the case of partly paid shares, the issuer's lien shall be restricted to monies called or payable at a fixed time in respect of such shares. Fourth, that registration of transfer shall not be refused on the ground of the transferor being either alone or jointly with any other person or persons indebted to the issuer on any account whatsoever. Fifth, that any amount paid up in advance of calls on any share may carry interest, but shall not in respect thereof confer a right to dividend or to participate in profits. Sixth, that option or right to call of shares shall not be given to any person except with the sanction of the issuer in general meetings. Seventh, permission for subdivision, consolidation of share certificate. A company can amend its AOA to make it suitable for listing of shares. A company seeking listing of its securities on stock exchange is required to submit a letter of application to all the stock exchanges where it proposes to have its securities listed before filing the prospectus with the registrar of companies. We shall now understand the approval of draft prospectus. The issuer shall file the draft prospectus and application forms with stock exchange. The draft prospectus should have been prepared in accordance with the statutes, notifications, circulars, guidelines, etc. governing preparation and issue of prospectus prevailing at the relevant time. The issuers may particularly bear in mind the provisions of Companies Act, Securities Contract Regulation Act, the SEBI Act and the relevant subordinate legislation thereto. Stock exchange will read in detail the draft prospectus only from the point of view of examining whether the draft prospectus is in accordance with the listing requirements. The issuer should also submit the SEBI acknowledgement card or letter indicating observations on draft prospectus or letter of offer by SEBI. Submission of application and fees and fulfilling formalities. Finally, if all the formalities are met, the company sends application for listing. Once permission is required, then the company is required to pay the listing fees. This fee is also paid annually. It is predetermined. Now, let us learn about the SEBI guidelines. Following guidelines are given by SEBI for listing of securities. Allotment of securities must be completed within 30 days of the date of closure of the allotment. Issuer company to complete the formalities for trading at all the stock exchanges where the securities are to be listed within 7 working days of finalization of the basis of allotment. Companies who are to issue to public to write shares are required to deposit 1% of the issue amount with the designated stock exchange before the issue. Moving further, let us now discuss screen-based trading. The trading on stock exchanges in India used to take place through open outcry without use of information technology for immediate matching or recording of trades. This was time-taking, inefficient and cumbersome task. This imposed limits on trading volumes and efficiency. In order to provide efficiency, liquidity, speed, and transparency, NSE introduced a nationwide online fully automated screen-based trading system known as SPTS, where a member can punch into the computer the quantities of a security and the price at which he would like to transact, and the transaction is executed as so on as a matching sale or buy order from a counterparty is found. This concept, although new to India, but gained much popularity soon. What are the features of screen-based trading? Screen-based trading helps in managing multiple order types simultaneously. It is real-time trading and helps people to connect major stock exchanges from where they are. Everyone has their login ID and password, so it is quite safe also. It helps to connect traders on and off the floor. Let us learn about screen-based trading at NSE. The concept of screen-based trading was introduced for the first time in India by NSE. It was fully automated screen-based trading. It uses a modern, fully computerized trading system that gave investors an easy, safe, and fast way of trading online. NSE's automated screen-based trading modern, fully computerized trading system designed to offer investors across the length and breadth of the country a safe and easy way to invest. The NSE trading system called National Exchange for Automated Trading (NEAT) is a fully automated screen-based trading system which adopts the principle of an order-driven market. Moving on to screen-based trading at BSE. Bombay Stock Exchange also shifted from physical stock trading to ringless trading under the name BOLT, which is Bombay Online Trading in 1995. This system, which is both order and code driven, was commissioned on 14 March 1995, and in May 1995 it was introduced for all the securities listed on the BSE. Actually, it started with the screen-based trading and in September 1997 switched over to the direct online access facility. In the initial stages, BOLT was available to brokers of the BSE based in Mumbai through leased lines. Today, it is available all over the country and even abroad. BOLT is the trading platform used by all the dealers, terminal operators to punch the buy-sell orders. The systems are linked by satellite broadband communication links to the computers in BSE. The orders are updated on this computer and broadcast to all the terminals instantly. The trades and order information is updated continuously. We shall now discuss the advantages of screen-based trading. Screen-based trading helps in instant execution of orders. It allows traders on and off the floor to send orders and receive trade confirmations. It helps to empower traders to simultaneously analyze options, quote markets, and execute orders. It is the most time-efficient method of trading. Let us now recapitulate what we have learned so far. With the growing technological changes, stock market has also undergone various changes. There has been change in the way people used to trade. But most important than trade is the presence of securities on stock exchange. For that, it is important that companies should go for listing of securities on stock exchange. Listing of securities is governed by many rules and regulations which are mandatory for the companies who want to get listed on a stock exchange. Thank you.